All right, welcome to this explainer. Look, if you're operating out there in the commercial trucking space, and it doesn't matter if you're an independent owner-operator managing a growing small fleet or running a massive logistics company, you already know that risk is basically your constant passenger. So today, we are demystifying the absolute most crucial component of commercial trucking insurance, primary liability. Our goal here is to take what usually feels like just a confusing, massive mountain of paperwork and transform it into a clear, straightforward roadmap, all so you can actually protect your livelihood. Okay, let's dive into this, because a single mistake in trucking insurance truly could cost you your business overnight. Honestly, that's not just some dramatic hook I'm throwing out there. It's a harsh, very real reality for folks who underestimate the sky-high stakes of this industry. Think about it. When you're rolling down the highway in a vehicle weighing tens of thousands of pounds, your margin for error is razor thin. The financial fallout from an accident? Absolutely catastrophic. Nailing your insurance isn't just about crossing some compliance checklist. It's about making sure that the business you have poured your blood, sweat, and tears into doesn't just vanish in the blink of an eye.
So, here's our roadmap for this explainer. We're going to cover 1. The first line of defense, 2. What it actually covers, 3. The danger zone, meaning the key exclusions, 4. Crunching the numbers, and finally, choosing the right policy. Let's get right to it.
Section 1. The first line of defense, primary liability. So what is it? Primary liability insurance is your legally mandated first layer of protection. But honestly, the absolute most important part of this whole concept is the phrase other people and their property. I really want you to think of primary liability as the them insurance. It is 100% designed to protect the public from you in the event that you're at fault in a crash. Think of it as a giant financial shield, but it's a shield against claims coming from the outside in. And because this protection is for the public, trust me, the law takes it incredibly seriously. If you try to cut corners or, just fail to carry adequate coverage, the penalties are brutal. We aren't just talking about hefty fines and legal headaches here. You could literally lose your trucking license and your operating authority altogether. And worst of all, without this shield, you become personally liable. That means you are paying totally out of pocket for medical bills and vehicle repairs. That kind of debt can easily trigger personal bankruptcy and completely wipe out all your personal assets. It's just not worth it. Moving on to Section 2. What does it actually cover? The two main pillars. Primary liability is essentially built on two massive pillars. The first one is bodily injury. If you cause an accident that hurts someone, whether that's a family in the passenger car or a pedestrian on the street, this coverage steps right in to handle their medical expenses. But it goes way beyond just paying the hospital bills. It also covers lost wages if that injured person can't work because of the accident. Now, the second pillar is property damage. Yes, this absolutely covers the twisting metal and broken glass of the other person's vehicle, but it also covers infrastructure. If your rig takes out a guardrail, a city signpost, or, damages a storefront, this pillar covers those repair or replacement costs. Oh, and let's not forget the hidden, and frankly, usually the most expensive cost of literally any accident, the lawyers. Primary liability also steps up to cover your legal defense and settlements. Anyone who's ever had to hire an attorney knows exactly how incredibly fast those bills pile up, right? This coverage ensures you aren't forced into fighting a massive legal battle using your own personal savings account. All right, let's slow down for Section 3, the danger zone, key exclusions. Now, what's really interesting about this slide is the super sharp contrast between them and you. We just talked about what is covered, right? The other driver's injuries and their property. But listen closely. Primary liability provides absolutely zero coverage for your own injuries, your own truck, or the cargo you're hauling. Zilch. A lot of new operators falsely assume full coverage is just kind of implied, but primary liability strictly looks outward. It never looks inward. Let's systematically debunk a few common myths by looking at these 4 specific situations where you are exposed. Number 1, damage to your own rig. If you total your cab, primary liability pays you nothing. You'll need physical damage insurance for that. Number 2, your cargo. If your load gets completely destroyed, you're on the hook unless you have motor truck cargo insurance. Number 3, your own personal injuries. Actually, to be totally clear, you're going to need separate policies entirely, like workers' comp or personal injury protection for your own medical bills. And number 4 is absolutely crucial. Damage while not under dispatch. Primary liability only covers you while you're actively transporting goods. If you're just driving the cab for personal use or running an errand, you might be driving completely uninsured. Section 4. Crunching the numbers, costs, and minimums. Let's talk money. $750,000. That is the magic number. For trucks operating interstate, the Federal Motor Carrier Safety Administration, the FMCA, requires a bare minimum of $750,000 in primary liability insurance for general freight. This number alone really emphasizes the massive scale of financial risk we're talking about here. A single serious accident can easily exceed $500,000 in medical and property damages. The federal government just wants to guarantee that you have the financial backing to actually cover that kind of disaster. And this brilliantly illustrates how dramatically risk can scale. If you are hauling hazardous materials, that $750,000 requirement completely disappears, and boom, the mandated coverage skyrockets to $5 million. Plus, state requirements can push these minimums even higher, depending on exactly what it is you're hauling. You absolutely have to know the specific legal parameters for your exact freight. Let's ground all this theory in reality for a second. Imagine you're involved in a highway accident, and the damage you cause to other vehicles and property comes out to around $300,000. If you're carrying that minimum FMCSA coverage of $750,000, your policy steps in and absorbs that entire $300,000 blow. You don't have to dip into your own pocket at all. But without that policy, that $300,000 bill lands squarely on your desk. And let's be real, for almost any independent operation, that is a swift and immediate death sentence.
So you might be wondering, how do insurance companies actually decide what to charge you? You can mentally check off your own risk profile right now against these variables. First, the type of freight matters. High value or hazmat loads, they cost more to insure. Truck size plays a big role too. Larger, more specialized vehicles demand higher premiums. Your driving history is massive. Any accidents or violations are going to spike your rates instantly. Location matters as well, because dense traffic areas or regions with terrible weather just naturally carry a higher risk. And finally, your deductibles. It's a balancing act. The higher your deductible, the lower your monthly premium. But you're taking on way more out-of-pocket risk if something actually happens. When you blend all of those factors together into one big equation, you are typically looking at an average annual cost of around $3,000 to $5,000 per year for small trucks. But remember, that is just a baseline. Depending on your driving record and the specific freight you carry, that cost can and absolutely will rise. It's a huge operational expense for sure, but as we've clearly seen, it is 100% non-negotiable. Section 5. Choosing the right policy. An actionable roadmap.
So the crucial point is that buying insurance shouldn't be some kind of guessing game. Just follow these 4 steps. First, thoroughly understand your needs. Honestly assess your freight, the size of your operation, and your interstate requirements. Second, get multiple quotes. Seriously, never just settle for the first offer you get. Prices vary wildly between different carriers. Third, rigorously review the policy details. You've got to read the fine print to know exactly what exclusions apply to your specific situation. And fourth, work with an agent who actually specializes in trucking insurance. Generalist agents often totally miss the nuances of commercial trucking, so find a real expert who can tailor a policy directly to how you operate. As we wrap up, I want to leave you with this question to really ponder today. Is your current coverage merely the legal minimum, or is it giving you actual peace of mind? Primary liability is your absolute first line of defense. But remember, it is just the beginning of a complete risk management strategy. Thank you so much for joining me for this explainer. Do yourself a favor and review your policies today. And hey, get ready for your next step, exploring motor truck cargo insurance so you can finally protect the actual freight that's paying your bills. Keep learning, stay safe out there on the roads, and I'll catch you next time.